Let's do a little trade, shall we?
Wait. Matron, take them away. Oh.
And a warm welcome to one and all. If this is your first time here, I am the very burnt and coffee obsessed Scruffy Trader. My first day back from holiday. I got back in the small hours last night, and as with most things, kind of addicted to the charts. Had a very good time on holiday, made some money while I was on holiday. Oh, good's that? Trading by the pool. Doesn't get any better, does it? So much so, I think I need another holiday, because I didn't really have one this holiday. One of the problems with taking a laptop with you like that is you still get inundated with requests, and I always feel duty bound to answer them. So I think on the next one I might just switch off altogether. Maybe have a little bit of a detox, shall we say. But anyway, let's see if you guys have detoxed from me, because I haven't posted a lot over the last sort of week or so. And I thought, well, I've got a little bit of time, Winky sorting things out, and I'll flip the screens on, see what's going on, and I'll show you a basket of trades, or I'll rephrase that, a basket of assets, and kind of how I drill things down a little bit. So if that makes sense and you like trading in the real world, just click that little subscribe button, smash the like if you do like the video, and if you want to see some more, drop in the description, find my Twitter feeds, and also switch the bell. So let's have a look, see what we're up to. Bum, bum, bum. I lay my charts when I'm looking at them in baskets. Why do I do it this way? It just helps me understand what's going on. Now, the one you can't see in the top corner, probably my head is there, is Euro Swissy. Then we've got the US Swissy, cable, CAD Swissy, USJPY, and CAD JPY. And then my chart of choice that I look at pretty much every day is the DAX. Why? Because it's the best of the bunch of the indices I look at. I only really look at two, which is FTSE and DAX, and I like the DAX because it's quick. The problem with it is if you're a new trader, it can actually be quite dangerous, because if you get it right, fantastic, but if you get it wrong, you really get it wrong, because it moves so quick. So why these? Why this particular setup? Well, I do have a window of the world that I look up all the time, and they are correlated. What a correlation means is I'll have euro dollar on underneath the DAX. Why? Well, because they are together. The euro drives the DAX. I have the pound USD cable underneath FTSE because the pound drives the FTSE. That sort of thing. I'll have gold sort of next to USD GPY. Why? Because both of them are world drivers, whether we like it or not. So correlations. Now, when I do a basket, I put them in a group like this. Once I've drilled down into the products that I'm going to trade, and then I can see them all at one time, and then I will systematically thin them out into one trade or one asset, because you should really trade one asset at a time. So where did this lot come from? Well, it comes from a sheet that I make every morning. Now, this is given to the Scruffy Squad every morning, so they know exactly what it is that I'm looking at. If you bear with me, I'll show you. Where we at? There we go. So every morning, or every morning I'm at work, that is there. So I dropped this in about an hour ago, and they can see the products that I'm going to be looking at, and then they can follow the journey with me if they so wish. So what's it telling me? Well, now we hit the top of the hour, 11, so it's like moving forward slightly. They know the products I'm looking at. Now I drill it into biases so that I can see which one's ready to trade and what direction I'm going in. Now, when you're day trading, your direction is neutral. Doesn't matter about the greater trend. Why? Because what's happening on a daily chart can be completely different to what's happening on a 5-minute chart. It's the oscillation of the market. So I look at it from an anchor chart. In this case, we are looking at the hourly, and I'll be looking for the direction, what that time frame is telling me. Look above to see if it correlates, and look below to see if it correlates, and then go with that neutral trend. Hope that makes sense, because there's the age-old thing, the trend is your friend, but they forget about the last part of that saying. And what you got to remember is a trend on a daily is not a trend on a 5-minute or a 15-minute chart. They are poles apart. But the full saying is the trend is your friend till the bend at the end. And that is true. You know, and you never know when that bend is coming. All right. That's why you got to do your homework. And that's what I do. It's what this sheet is. So what it's telling me for the next hour is predominantly buys. Cable is to be a sell. But it's also telling me in this next hour, it's not ready. All right. I only have the DAX to play with. So that's what we're going to do. So I'm going to drop that down, and you can see. So what I'm looking at now is the DAX. So we'll tidy this up a little bit and have a little look. I can see my levels in play. It's telling me to buy it. So why am I going to buy this? Well, if we just drill this out, as I say, we go up and we go down. Well, you can see the colossal drop. The price is still contained between this high and this low, and it's oscillating around, but you can see it's grinding up, and you can see the volume. It's had a good push up. It hasn't really attempted to go lower. Tails in recent history are predominantly to the upper side, as is this, and we are now heading up into this level. Superb. Look at the hourly, see what's going on. Well, again, you can see that, and you can see that it's pushed, it came down, and now it's starting to move its way up. Now, there's a little bit of indecision at this moment in time. So what we do is we kind of sit and make a choice. Well, okay, well, where do we think is a good opportunity to get into this? Well, we drop this further down again. We'll start having a look and we'll see. So if I drop this further, right, you can see there's been a good push down, good push. It's now thinking about it. So it may come back down slightly to then move up. I then also need to work out, is it worth it? Now, less than 10 pips is not worth it. 10 pips and above is worth it. So you need to find your last point of entry. So if I just get a little drawing tool, I know that's a level that can rebound the price. Well, I've got plenty of room to get up into there because I think it's coming here. So that's good. All right, so that's another tick box. And when we're talking about tick boxes like that, I get pulled all the time. Recently, I'm going to be doing a copy of Scruff about assumption this weekend, based on a comment that was posted in the 5 percenters. Now, kind of stepped away from the 5 percenters, well, all public forums really, because you'll always get some bonehead who's having a go all the time, and you just think, what's the point, you know? And what I'll say is, you're never criticised by somebody that's doing better than you, ever. It's always some moron who hasn't got a clue what they're doing, but is a Barstool manager. Anyway, they were pulling my salary and one thing and another. They know nothing of my salary. They only know the bits and pieces that I tell you. They pull my charts apart. You know, and it's not just one person, it's a multitude. I've got like a core about 20 odd that email me certainly every week, at least one of them, with some form of abuse or sarky comment. And I just think to myself, why? You know, it amazes me. But the rules I have set in place are what I call a benchmark. So I won't enter a day trade less than 10 pips, or very rarely. You know, if I'm doing a quick scalp, sort of on non-farm payroll for argument's sake, I know it's going to burst. So 5 pips, but fully loaded, makes decent money. But on a general situation like this, I kind of work 10, 15 pips. If it's less than that, it's not really worth the risk or the hassle. And it's likewise with my salary. Now, I have multiple accounts. I trade my wage account, my car account, I trade a house account, and I trade a pension account. Now, they're all different asset classes. So I split out what I do, and I'll go through this more in Coffee with Scruff. But again, it's based on a benchmark. Now, I base my salary on about 30 grand a year. And people go, 30 grand a year? Well, actually, 30 grand is a good salary in the UK. And what you got to remember is I have no debt, no mortgage, don't owe anything, right? It's my money. And the other side of it is I earn considerably more than 30 grand. Why? Because 30 grand is all I need. It's just what I need to pay my bills. And then whatever is above that is my luxuries. It's kind of the way my head works. But I'll go through it fully with Scruff, Coffee with Scruff. Don't really need to justify my life, but it might help you in the way that I think. So watch out for it. It'll be a good one. Anyway, getting back to this, those principles are the same here, but drilled right down. So I'm looking for 10 pips, and I'm also looking for a certain amount of money, not pip count. So the pip count just makes it viable. The money makes it worth it. Hope that makes sense. Anyway, so as you can see, it is moving backwards on itself, as I was kind of anticipating. And I'm quite happy with that. And all you do now is you monitor every 15 minutes or every 5 minutes, whichever way you want to look at this, looking for the optimum point to get in. Now, this isn't too far away from where I want to get in, because there is certain triggers that you look for. And what I'm going to do is I'm just going to let it run. I'll leave the camera running, and you'll be able to see the order go in and then close. I'm looking for, because I'm still technically on holiday today and tomorrow, I'm not going to go mad. I'm just doing a process for you to see it, and also to see consistency in the way that I work. If I get 10 to 20 pips out of this, 100 quid, more than happy. Anything over and above that, fantastic. And that's some of the best advice I can give you. Keep your targets realistic. If you swing for the fences, no, it's normally a recipe for disaster. When you're swing trading, yes, have your bigger sort of RRs, but even then, manage your trade. You know, I said that before. I was talking to a guy this week, funny enough, and I can be wrong on the direction, right on the trade. I can be right on the direction, right on the trade. I can be completely wrong on the whole lot. But the one part of the whole puzzle, regardless of which configuration it is, must be the same. I will always be right with trade management. I will constantly trade the same way. Rinse and repeat, and repetition is the key. So if you've made a choice and you think you're going up, great, stick with it, but manage it the same way. And that way you'll cut down your losses. So let me run this out, and then I'll finish my coffee, and I'll come back to you with something at the end and kind of tell you what it is that I'm looking at. All right, catch you soon. Okay, guys, done. Hit target. And we got paid. And if you look at it, it's stalled pretty much perfect to the level that I set. Why? Levels are very important. Regardless of what anybody tells you, levels are king. They really are. And if you know how to draw them, you're halfway to winning. You know, because it'll come up and it'll bounce. Does it all the time. And you see me do it consistently, day in, day out. Now, I don't have anything running. Nothing's there. And I wanted 100 quid, as I said at the start. 106, I'm happy with that. Did do a fat finger trade there. I meant to adjust it and I clicked it and it knocked it off. But who's to say you can't re-enter, which is what I did. In we go. Took the bulk of the money out when it was pulsing, because when it's pulsing, you don't actually know if it's going to slam backwards or forwards. So again, we come back to the management point. And that's what today was all about. It's the management point. And what is that? Doesn't matter what the market's trying to achieve or what it's doing. Done my homework. I've had a look to see which basket of assets I wanted to trade, drilled them down just using my spreadsheet. And the spreadsheet's nothing fancy, guys. It's just a visual aid for me rather than trying to remember what's what. So I can drill it down. Once I've zeroed in on the one asset that I want to trade, I then manage it. And that's the management point. And it's why I was saying it doesn't matter what the market's trying to achieve, whether it's going up, whether it's going down, whether it's trying to get to a level, a moving average, out a Bollinger Band, bottom of an oscillator, a volume profile spike, doesn't matter. Right? As long as you can recognize a condition that you're comfortable with and then rinse and repeat the management process. And in this instance, it was a case of, right, I was going to trail the price down and I was going to trail the stop up. And what does that mean? You would have seen that I was stepping the price down as the price went against, like sort of against the entry point, because I always use pending orders. That makes my life a lot easier. It also means I can trade multiple accounts at the same time as well, because I'll look at it, say my swing accounts, I look at them every 4 hours based on a daily chart and go, okay, I want to get in at X point. I just leave an order there, let it get on with it. I don't need to look at it again for another 4 hours. If it's been triggered, fab. If it hasn't been triggered, so what? It's only been a couple of minutes. And then when you're day trading, I focus on a single account and I do the same process, but it is micro down to maybe a 15 or a 5 minute chart. Management. That is your key. Because remember, trading is a job. And within any job you have to follow certain tasks and certain criteria the same each time. Why? It's a job. And what does a job do at the end of the week? It pays you. And if you're good at the job, you get a better salary. Now, I hope this makes sense, because too many come into this game thinking it's easy money and it's an easy process of just show me where to press the button, like X marks the spot, because I've seen some dickhead with a Lamborghini and he said he did this in a month. Or you've got another dickhead who says, well, I can fund 10 accounts and just trade one and clone it to them all. No, you've got to know what you're doing. And all of these are preposterous. You know, everything I do, I back up. And why? Nothing to hide, guys. What you see is what you get. Don't like it? Great. Watch somebody else. Watch the Lambo boy and dream of something that'll never be. Or, if you are interested, treat it as a job. Rinse and repeat every day. Never be greedy. And you'll find that each week your account grows ever so. Take a look at Morningstar for argument's sake. I get mocked on it every day because it's only a small balance. But that account has virtually doubled in sort of 10 weeks. And it is growing constantly. And that's how I build accounts. You know, very small and just built them up gradually. But as they got bigger, the building got faster. It's the early stages that's the hardest, guys. All right. And that's what I'm trying to show here. I'm trying to show you consistency, and that just one step every day can make you money. So hope that makes sense. I cherish your thoughts. Contrary to belief, I do answer every comment that comes in, and I answer every email that comes in. Find all my details in the description below. And if you really want to see it, go find the Scruffy Squad, and those guys will tell you exactly what I do on a daily basis. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.